After months of disruption and uncertainty, the Strait of Hormuz, one of the world's most vital oil arteries, has officially reopened. With this new shift, global oil markets are on edge, asking one crucial question: does this mean the end of the oil crisis that has gripped the world for so long? Let's dive into the implications of this major development. Hello everyone, I'm John AG, and welcome back to the Wealth Reactor. Today we're addressing a game-changing moment in global energy markets, the reopening of the Strait of Hormuz. This waterway has been a critical choke point in the global oil trade, and its recent closure, and now its reopening, has been a significant source of volatility. But now that it's reopened, is the global oil crisis finally behind us, or are we merely facing a temporary fix to a much deeper problem? The Strait of Hormuz, connecting the Persian Gulf to the global shipping lanes, is responsible for the transit of about 20% of the world's oil supply. For months, the closure of this passage due to political instability sent shockwaves through the global economy, causing oil prices to surge, inflation to rise, and many nations to face serious energy shortages. Its reopening, then, is being hailed as a turning point, one that could signal a return to stability. However, as much as the reopening brings optimism, we must approach this situation with a nuanced perspective. While this development could ease some of the immediate pressures on the oil market, it doesn't necessarily mean the end of the oil crisis. The world is undergoing significant shifts in its energy needs and consumption patterns. The global push toward renewable energy alternatives is growing, and many nations are gradually reducing their reliance on fossil fuels. The reopening of the Strait of Hormuz might stabilize oil prices for now, but the broader energy transition presents a new set of challenges for the global economy. For countries like Saudi Arabia, the UAE, and Qatar, whose economies are still tightly linked to oil exports, the reopening will provide a welcome boost. The flow of oil will likely increase, leading to a stabilization of prices and alleviating some inflationary pressures. But this relief may be temporary. The future of oil in the global economy is uncertain, and many oil-producing countries are looking to diversify their economies to reduce their dependence on fossil fuels. The Strait's reopening does give us a chance to breathe easier, but it doesn't mark the end of geopolitical risks that continue to linger in the region. More importantly, it doesn't solve the long-term challenge of transitioning to cleaner, more sustainable energy sources. The global oil crisis may be on a temporary reprieve, but it's not over. The world's energy future will still require significant innovation, strategic investments, and international cooperation to ensure long-term stability. The Strait of Hormuz is a vital waterway that holds immense strategic and economic significance in global trade, particularly when it comes to the oil market. Stretching just 21 miles at its narrowest point, the Strait of Hormuz connects the Persian Gulf with the Gulf of Oman and serves as the main conduit for oil shipments from the Middle East to the rest of the world. This narrow stretch of water is one of the busiest shipping lanes globally, with approximately 20% of the world's crude oil passing through it daily. It is not just a passage for energy resources, it represents a critical point of global economic stability and security. Historically, disruptions to this passage have triggered shocks to the global oil market, creating price surges, inflation, and economic instability. The strategic importance of the strait cannot be overstated. It is an artery that supplies the lifeblood of the global economy, and any disruption to this flow sends ripples throughout the financial landscape. As of today, the global oil market is still recovering from the shocks that occurred during the brief closure of the strait in recent months. The reopening of this key passage is seen as a much-needed relief to the market. The price of oil, which spiked to around $120 per barrel at its highest point during the uncertainty surrounding the strait's closure, is now stabilizing as tensions ease. Current oil prices hover around $85 per barrel, still affected by broader market forces, but the reopening of Hormuz brings a sense of optimism that supply chains may soon return to normal. The price of oil is not merely a reflection of supply and demand, it is a barometer of geopolitical tensions, and any disruptions to the Strait of Hormuz are felt in the wallets of consumers worldwide. This is a stark reminder that energy prices are not just driven by economic factors. They are deeply influenced by global political dynamics and instability. The strait's historical significance is not a recent phenomenon. Since the early 20th century, this narrow waterway has been critical in shaping global trade routes. The oil-rich nations of the Middle East, particularly Saudi Arabia, Iraq, Kuwait, and the United Arab Emirates, have relied on this passage to export their vast oil reserves to energy-hungry markets in Europe, Asia, and beyond. In times of conflict, the Strait has been a focal point for geopolitical maneuvering, as seen in the Iran-Iraq War of the 1980s, when tanker traffic was attacked and tensions over control of this crucial passage escalated. The Gulf War in 1990, the 2003 invasion of Iraq, and the ongoing political instability in the region have all added layers of uncertainty to the security of oil transport through the Strait. The economic consequences of these disruptions have been severe. A prolonged closure of the Strait could result in a massive contraction of oil supply, which in turn drives up prices and increases the risk of global economic recession. For many years, the fear of such disruptions has loomed large in the global market, prompting countries to seek alternative energy routes or strategies for maintaining oil supply security. When the Strait faced temporary closures in recent months, the ripple effects were immediate. Global oil prices surged, inflationary pressures increased, and countries dependent on cheap energy imports saw their energy costs climb dramatically. Governments scrambled to manage the fallout, but there was little they could do except hope for a resolution that would allow the vital trade route to reopen. Now that the Strait of Hormuz has reopened, the immediate threat of oil supply disruptions has abated, allowing prices to settle. The stabilization of oil prices, currently around $85 per barrel, is a welcome relief to many countries that were facing rising energy costs and economic uncertainty. However, while the reopening offers a short-term boost to the oil market, it is far from a permanent solution to the larger structural challenges facing the global oil trade. The Strait of Hormuz's reopening is a reminder that while geopolitical stability in the region can provide temporary relief, it does little to address the long-term volatility that comes with over-reliance on oil as the world's primary energy source. For global markets, the Strait's reopening signals a return to a semblance of normalcy, but the underlying risks remain. The geopolitical landscape in the Middle East is volatile, and the world's dependence on oil remains as strong as ever. Yet as we look toward the future, we must recognize that the events of recent months have highlighted the fragility of global energy security. The stability of the Strait of Hormuz is only one piece of a much larger puzzle. The question remains, how long can we rely on a single choke point to sustain the global oil trade? As the world transitions to more sustainable and diversified energy sources, the future of the Strait's relevance remains uncertain, but its importance will continue to be felt for the foreseeable future. The reopening of the Strait of Hormuz is, therefore, a temporary relief for global markets. It brings a sense of stability to oil prices and reduces the risk of further economic turbulence. But as history has shown, geopolitical tensions in this region are never far away. The question now is whether the global economy can continue to weather the storms of oil price volatility, or if the world will move toward a more sustainable and secure energy future, one that relies less on oil and more on renewable alternatives. The global oil market has long been a reflection of geopolitical tensions, with the volatility of oil prices often tied to instability in key oil-producing regions. One of the most significant triggers for price surges has been disruptions in the Strait of Hormuz, a strategic choke point through which around 20% of the world's oil passes. Over the years, political conflicts, military actions, and diplomatic crises have created substantial uncertainty about the security of oil supply through this vital route. Every time the Strait has faced a closure or a threat of disruption, global oil prices have spiked, causing not only immediate shocks to energy markets but also reverberations throughout the global economy. From inflationary pressures to shifts in fiscal policies, the economic impact of these disruptions is immense, and the reopening of the Strait is a moment of both relief and reflection for policymakers and market participants alike. Historically, the relationship between oil prices and geopolitical tensions has been clear. The 1973 oil embargo, for example, is one of the most vivid memories of how oil shortages, exacerbated by political decisions, can send shockwaves through the global economy. In that year, the Arab members of the Organization of Petroleum Exporting Countries, OPEC, imposed an oil embargo in response to Western support for Israel in the Yom Kippur War. This embargo led to an immediate quadrupling of oil prices, triggering widespread inflation and causing severe economic slowdowns in oil-importing nations. It was a stark reminder of how vulnerable the global economy was to disruptions in the oil supply chain. Fast forward to the early 2000s, and the Gulf War once again underscored the fragile relationship between oil and geopolitics. When Iraq invaded Kuwait in 1990, it not only destabilized the region but also created a global oil shock. The prospect of further disruption to the flow of oil through the Gulf led to a spike in prices, pushing them from around $20 per barrel to over $40 per barrel. Such sudden increases in oil prices are not merely an inconvenience. They cascade through the global economy, increasing transportation costs, inflating consumer goods prices, and triggering central banks to raise interest rates to combat rising inflation. These events are a sharp reminder of how energy markets are deeply interwoven with the political landscape, and the reopening of the Strait of Hormuz is a crucial event that helps ease some of the uncertainty, but not without leaving deeper questions about the long-term stability of energy markets. The most recent closure of the strait, or the threat of it, highlighted just how sensitive the oil market is to geopolitical events. In 2023, when tensions between Iran and the United States escalated, there were fears that Iran could block the strait as a form of leverage. The potential for such an action sent oil prices soaring to over $120 per barrel, with traders fearing that a protracted closure would lead to supply shortages, pushing inflation higher and potentially triggering an economic crisis. In addition to the immediate price increases, this uncertainty forced governments and industries to make costly adjustments. Companies scrambled to secure alternative supply routes, while consumers saw a sharp rise in energy prices, impacting everything from gasoline to heating oil. It's these types of spikes that have far-reaching consequences beyond just the oil industry. They affect everything from consumer spending to global trade flows. The reopening of the Strait of Hormuz, therefore, marks an important turning point in this cycle of volatility. With oil prices retreating from their earlier highs, currently hovering around $85 per barrel, there is some relief in the market. For energy importing nations, particularly in Europe and Asia, the reopening alleviates some of the pressure that had built up due to fears of prolonged disruption. Inflationary pressures, which had been rising due to high energy costs, can now begin to stabilize as the threat of supply shocks recedes. For oil exporting nations, such as Saudi Arabia, the UAE, and Kuwait, the resumption of steady oil flows means a return to consistent revenue streams. These countries, whose economies are heavily reliant on oil exports, will see their revenues stabilize, providing much-needed financial certainty for their governments. However, while the reopening is undoubtedly a positive development for the oil market in the short term, it is important to recognize that the global economy's vulnerability to oil price shocks remains. The reopening may provide temporary relief, but the underlying issue, reliance on a single choke point for such a large portion of the world's oil supply, has not been addressed. Geopolitical risks in the region are still ever present, and while the Strait of Hormuz has reopened, the possibility of future disruptions remains a constant concern. Oil-producing countries are well aware that their economies, and indeed the global economy, are still susceptible to price shocks triggered by instability in this region. This reality brings us to the larger question: how long can the world continue to depend on such fragile supply chains, particularly when the global demand for energy is changing rapidly? In the broader context of energy markets, the strait's reopening serves as a momentary relief for an economy still deeply dependent on oil. As the world slowly transitions toward renewable energy, the importance of oil as a primary energy source is diminishing, though it will remain a central part of the energy mix for decades to come. The geopolitical risks tied to oil, especially in regions like the Middle East, are likely to continue impacting global markets. The reopening of the Strait of Hormuz, while a critical development, is only one piece of a much larger puzzle. As the global economy faces a growing shift toward clean energy, the role of oil will inevitably continue to evolve, but for now, the strait remains a significant focal point of geopolitical and economic risk. The question that continues to linger is whether the world can truly achieve energy security without being so dependent on oil and its increasingly volatile supply chains. In conclusion, while the reopening of the Strait of Hormuz is certainly a positive development, we must remain vigilant and aware that the global oil crisis, in its broader context, is far from over. As we look ahead, we need to continue addressing the geopolitical, economic, and environmental factors that shape the future of energy. Thank you for joining me today. I hope this analysis has provided clarity on the reopening of the Strait of Hormuz and its impact on the global economy. If you found this discussion insightful, don't forget to subscribe to the Wealth Rector for more in-depth expert commentary on the forces shaping our world's economy. Until next time, stay informed, stay ahead, and take care.